Good morning, traders, and this is your Dow Jones day trade setup for today. So, change in strategy. I'll run through that with you now quickly before we go. Not really a big change; it's just more of a tightening of the strategy. And the small account we're sitting at 19,366. So we had a pretty good run during the quiet period last week, but we also had was very volatile and had quite a big loss there as well. But anyway, so we are still on track at the moment, so we're moving forward, which is the important part. Okay, so what we've got here is two screens. Both of them are 4-hour charts. This is the 4-hour chart over here on the Bill Williams, and this is the 4-hour chart on a similar strategy to Bill Williams. So this is really just a 21, 13, and 8 EMA. Okay, so that's all we're using there, and the principle is exactly the same. The oscillators that we're using here, we do have the Williams percentage R, same as what we have with the Bill Williams, but then I'm using a double stochastics, and the stochastics is a 2155, and if I remember correctly, 855. So we've got 2155, which is the 2153, sorry, the settings for the stochastics, and then we have another stochastics there, which is 2555. Okay, now the objective is pretty much when they group the downside like this, and we add a level, that's where you're looking for a long. When they group the upside like this, and at a level, that's when you're looking for a short. So that just helps you with your levels. But the important part is this structure here allows you to stay on the trend. And what I'm going to do here, just quickly run here before we look at the markets for today. So you'll see from a Bill Williams perspective, pointing down at the moment. Okay, but you can see it takes a lot longer for the crossover to happen, and you can see down looked like it was going to do a crossover, then down again, whereas here it's much tighter to each other. It just keeps you on the trend for a lot longer. Okay, so you can see here this first bar here, you're still below the Bill Williams, but if you look here, that's a break above and a crossover of these moving averages. Okay, which then indicates you're looking for the long. Okay, so the principle is exactly the same. If you're above the moving averages and they're pointing up, you're long. If you're below the moving averages and pointing down, they're short. Okay, so that's a quick crash course in it. It's nothing really difficult, no difference to what we currently have. Okay, so right now we have a pretty interesting structure forming here. So this is a bit of a cup and handle here. We're going to need to break below 28,472. Okay, let's going to move that to a lower time frame, and there's a reason for that. Okay, so what we're looking at is, on the one side we're looking at the 1 hour, and at this stage the trend is down. If you look at the 12-minute, the trend is down, and you should actually technically break below this fractal here. You're looking for a short with a stop above this fractal here. Okay, and this side here is a 12-minute candle, so a 12-minute chart. We're in the 12-minute there. So the trick here is the trend is measured on the hour. So right now the trend is to the downside. Okay, we are below the moving averages on the hour. You can see we're pretty much down. So ideally what I'm looking for is probably another retest, bounce back up. Even a gap close would be an interesting point to be short. So at this stage on the lower time frames, it does look like short is the way to be. Okay, I just don't want to be short down the bottom here. So I want to see some kind of a bounce back and look for the shorts from there. So if you look at this, there's a breakout level there. Let me just maximize this quick. So you can see there's a breakout level here, which is 28,634. That would be a great area for a short. Alternatively, what we're going to find is a break below 28,472. Then I'm looking for a pullback before I'm short again. So if we just get to the 4 hour, you can see we've rallied, pulled back. One thing that does worry me is that this here is a wedge break. Okay, so this was a wedge, not that strong, but it was a wedge. Break up, came back, tested, back up. So we could get another test on this before it bounce up again. So I think, yeah, it's going to be a pretty difficult one to assume that we're going to fall to the floor. I don't think we're going to fall to the floor. I think we're going to find some support somewhere. And if I just do that, you can see there's a pretty strong level of support down here at 28,370. Okay, so that's what I would expect. Sort of a move down, find some support somewhere before bouncing back to the upside. Okay, this is all just moaning and groaning about the oil war that's underway at the moment. Okay, so right now the trend's not that strong to the downside, but it does look like it's coming to the downside. So what you're looking for is any kind of retest, sort of bounce back up from where we are. So gap close or something like that. You want to be short, provided that we are below the moving averages. If we're below the moving averages, so in other words, on the hour we run back up and we start rolling over, and you see any price action on the 12-minute inside bars, pin bars, anything like that, right up here near a level, it's going to be well worth a short. And the thing is about that, you're going to have still going to be a pretty big stop loss, over 100-point stop loss. But that, I think, is the structure that I can see at the moment. Okay, so that's what we're looking for. We keep the 1 hour open. Okay, the hour will determine our trend, and we need to be below. If we're closing above the moving averages like this on the hour, you need to be patient and just wait for it. So what you're looking for, just go find one. So here you can see is a great example here. You can see it doesn't break below the moving averages, stays above them, stays above them. So we start getting this kind of stuff. There's another one. There's warning bells, and then we break back below it. Okay. When we break back below it, you can see we are below, bouncing off the moving averages until we start poking above it again, and then it swings back the other side. Okay, so that's basically what we want to do. We want to stay, if it's long, we want to be above the moving averages and we want to be buying, and any short, we want to be below. You see there's a retest there, and the deviation from the moving averages applies as well. So your Bill Williams wise man number 1 still applies as well. It's deviation from the moving averages. Okay, so what we're going to do quickly is just get onto the Ichimoku, and we'll maximize that for us so we can just run through that quickly. Okay, so 12-minute, we are in a downward trend at the moment, but Kijinsen and Tikens are being flat, so not that promising at the moment. 30-minute, we've got a crossover. We are below the cloud, and Chico span is below price. So that is all bearish at the moment. 1 hour is also bearish, but the flat Kijinsen and Tikens is a bit of a worry. I'd like to see a bounce back. So ideally, I'd like to see the gap close and then a fall to the downside. Okay, so we are looking for shorts, but we're just not looking for shorts here. We're looking for shorts higher up. Okay, however, the 4 hour is a complete different story. So that is bullish, bearish, bullish, bullish. But it's flat Kijinsen, Tikens, so we're going to have to wait, as far as I'm concerned, for the US Open in order for us to get any sort of solid direction. At this stage, we are ranging and we are confused. And the hour is a complete different story. Okay, so when I say complete different story, let's get rid of this noise. We have this massive inside bar here, but we are also potentially at the bottom of a channel. Okay, if we do break below this and get a daily close below last week's low, last Friday's low, yeah, I think you've then got a really good solid case of a move down to 28,130 or 28,210. Okay, but we're going to need a daily close below 28,481. So there is a possibility that we have a downside move, but this setup here on the 4 hour with Kijis and Dickinson as it is now, I need to see a crossover. I need to see a bearish crossover, and that's a bullish crossover above the cloud. Okay, so right now I'm not looking for shorts at all. Okay, this could very well be a nice setup for a long, but I'm going to want to see a trend change. Okay, so I think for me at the moment on the Dow, it's wait and see. This could be a bounce off the bottom of the channel. Well worth. So I just want to get that. So it's well worth paying attention to that. And if you look at it this way, 71 points at the moment, so relatively high risk. You're going to need to see some positive price action here. And this is quite a big gap down. So at this stage, looking at the hour, trend is down, but I want to see a retest of the cloud or Kijinson or gap close, something like that. I just want to see a pullback here. Then we can look at price action to see what's happening and then get in for the short up here and anticipate a break of this channel, which could be quite big. Okay, so that's kind of my view for today. Going to be sitting and waiting, not looking to get in where we are now. If we do break below here, I'm going to look for a retest and then get in for the short. I'm not going to take the short on the break. I'd rather take the short higher up. Okay, so I want to see price come back up, preferably close a gap, then watch price action on lower time frames, get in, get a tight stop, and then drive it down, see if it gets driven down through the channel. Okay, and that's kind of my setup for today. Okay, so I hope that helps, and we'll catch up with you later. Cheers for now.